U.S. corn carryover stocks changed and the market reaction. Jerry Gidel is ready to assess all of that and more right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, we have had a week with the USDA acreage report where they have also updated the carryover stock. What do you have seen that the corn market has reacted to this updated carryover stock?
Yes, yes. Well, one of the things that the USDA has to deal with is the finite situation on their supply demand numbers, and the quarterly grain stocks back on June 30th were about 15 million. 115 million less than trade average gas, but it really accumulated to the point where the indications of that smaller quarterly stocks indicates our feed usage number needed to rise. Well, at this point, yes, we've had a good amount of corn being fed to our cattle at this point because they're going to heavier weights. But we're getting to the point now where this thing starting to make an impact here on things. And in reality, the 150 million increase that the USDA made in this month's feed usage is really uh, looking at our output for last year and the fact that our yield probably wasn't 186 bushels in that. Now, does that mean that the 2 uh, billion number the USDA came up for carryover stocks extremely bullish? No, it's going the right direction, and it's going to make the weather this summer a lot more sensitive uh, to our yields and things of that nature. So that was the real big news as I see it here in the USDA's updates. The wheat numbers also showed some good reductions in both hard red and soft red outputs. I think that was around 60 million or so between the two million bushels. But the one thing that the USDA did do was kind of keep their other spring wheat yields at pretty good levels. North Dakota and Montana are the two that really influenced that particular output very dramatically. And so overall, our wheat production number didn't slide all that much, but the wheat number took off on the day of the report, primarily because we really had finally went through the biggest portion of our harvest. We're over 60% done, and the prospects in Nebraska and Colorado weren't all that strong because of the summer's heat and drought issues and that. So the wheat market started to move higher even ahead of the crop report because of that factor, and that also impacted some of the beans prices too this
Yeah,
week.
so why did you see the different tail for beans?
Well, the soybeans statistics, uh, they were influenced by the fact that we had about 650,000 more planted acres and that, and so uh, and also the kind of a subtle change they did increase exports by 10 million, and that overall the statistics since they uh, didn't end up have a big adjustment in production because of the modest increase in planted acres here of 650,000. Uh, they pretty well kept all the statistics together, even by increasing the exports about the additional production that we had. So we were at 310 million on beans. Beans are a lot more drought tolerant, things of that nature. So that there's not as much uh, fear of summertime weather impacting their yields. But it's going to be an interesting watch on things here. I think the one thing that probably happened here is that some of the late double crop beans that some producers were looking at probably didn't get planted. Now we didn't. We we'll have an update on that. Not August, at least in September here on that. But in general, the soybean output in the U.S. is going to be pretty stagnant, except for whatever weather impact we have or don't have here, uh, the rest of the season and that. And the world will probably be watching uh, the final stages of other producing areas. And also, the one big factor that I think is really a subtle one that's just starting to creep into these markets is the fact that there's been some tough weather in China, and now there's another typhoon uh, projected to hit Shanghai and north in China, and that would be a pretty significant factor in there because that area all up through Manchuria is where the Chinese bean production is at, and right now at least, I think there's only even some subtleties here uh, on concerns about corn. Because the one thing that did happen this week, after many, many weeks, the Chinese were a buyer of U.S. soybeans here. Uh, Not that the rumor has it there are 1.2 to 1.5 million metric tons in this purchase and that, but I think they decided the price points were pretty attractive even to go ahead and at least get started because they had not touched any of this general commitment they have, which seems to be to 25 million metric tons of soybeans for us in the 26-27 crop year. Uh, right now, I don't sure anybody feels comfortable about what the Chinese will or won't buy, but they decided that the price points were pretty attractive, so they came in and bought. I think the first tranche is about 400,000, and there's talk this next one could be 600,000 or more.
Yeah, so how are you seeing these prices sustaining now, and you see a good time to sell corn at this rally?
Yeah, yes, I think we got to take advantage of this potential heat wave that's coming at us now. To some extent, last time this heat wave moves a lot further. It seemed like it moved further into the Midwest, into Illinois and Indiana. We're going to have some mid 90s type stuff, but most of this heat's going to be concentrated in the Great Plains as it moves in here Monday through Friday this coming week. I'd be keeping a close eye on those last portions of people's production and that to market some beans here. And to some extent corn. Also, I think corn. It's as we mentioned here, the carryover stock on corn is going to be still substantial. Even at the best here, I think we might see a number that might get below 1.9 billion because of the size of last year's crop being overestimated. But 1.9 billion is still a substantial number over even last year's 1.5 from there. The markets right now, at least, I would be looking at the well, right now, the market I think has shifted all its direction on prices out to the new crop, both in December corn and November beans, uh, and that definitely um, right now, at least, I'd be looking at another 15 cents or so up in corn and maybe another 20 cents or so on beans to market some additional stuff. Maybe you want to carry just a minor amount, but right, I'd take advantage of this coming week's U.S. weather here because it's still very early. We're only from a standpoint of pollination at this point, we'll probably be moving from the 15 to 20% level that we had last week up to probably into the 30% level. That still means that weather-wise, good weather at the end of this month could still make things pretty good on corn. Soybeans, it's always tough to figure out their pollination situation, particularly with the earlier plantings we've had on beans. But in general here, uh, August weather is the key feature for beans, and late July is the factor here for corn on its impact from U.S. weather on a traditional basis.
All right, sir. Thank you very much.
All right. Take care, dear sir.